Welcome everybody to today's webinar on tax reform to grow our economy and create jobs. My name is Roman Basie. I'm the president of the Center for Financial, Legal, and Tax Planning. I'm an attorney and CPA, real estate broker, as well as a title insurance agent. And just as a precursor to this presentation is a keynote speech that we give to associations across the country. And it's based upon the House Ways and Means Committee's report that they produced last summer in July, somewhere in there of 2016, and the tax reform that they wanted to see happen. The House Ways and Means Committee at that time was Republican controlled, but we were anticipating a Democratic presidency at the time. But the House Ways and Means Committee put together a committee to research tax reform and what we needed to do to grow our economy and create jobs. As you'll see, now we're going to just do a real short webinar today, but as you'll see through this webinar, how the House Committee's report lined up with what President Trump came out with a couple of months ago when he outlined his tax reform that he wanted to see. There was some small differences, but they're very close in alignment as to what they want to see happen. So there is a good indicator that this is the type of tax legislation that we're going to see. I also kind of want to give you a little introduction into what we might see. President Trump issued an executive order in April where he wanted to minimize the tax burden across the country, and he directed the Revenue Department to start looking at the different laws that are out there and to strike all of those that are unnecessary. Well, as of yesterday, June 20th, the preliminary report was due to him. I have not seen it yet. Today is the 21st, but that will be our topic in July. Will be the preliminary report that they produced for the president, what that report says. The final report is due in August, so look for that to happen. Anyway, let's take a look at, so here's where we were in June, and look at where we thought the general election was going to be in June, from June 10th to June 13th. Again, they were highly anticipating a Democratic presidency at the time, even though we had this House Ways and Means Committee was made up of a majority of Republicans. And we don't really want to get into the political aspects of what was happening, but you have to understand that history, that they were producing this, not really knowing what we held in the future. And there is where it is. It's called A Better Way. It's our current vision, or A Better Way, our vision for a confident America. And this is what the House Ways and Means Committee produced in June of 16. You can go online. You can go right to the House Ways and Means Committee website. They have an app. You can read the presentation. You can watch the presentation. It's pretty interesting as far as what they put together. And for those of you that have never really dove into tax legislation, this is the committee that produces our tax legislation and sends it to the House of Representatives for voting. So as tax attorneys and CPAs, we will highly watch what comes out of this committee. It's important to know taxes, as we all know, federal, state. We have problems with our current situation. We believe there are potential solutions out there. The House committee believes that. And the final bill will likely be similar if we see one. Now, all along, we've been counseled that we believe we will have a tax bill towards the end of this year. And that's fairly common for tax legislation to come out before the end of the year, before certain provisions expire. That's what you can look for. So October, November, December, we should really see the rhetoric really ramp up when it comes down to it. So look at problem. They outline some problems. Problem one, the current code imposes burdensome paperwork. We all know that. We all prepare tax returns. We look at tax returns as business owners. We have tax returns that we go through. They are burdensome, and the compliance costs are out of this world. Problem two, we deliver special interest subsidies and crony capitalism. Problem three, the current code penalizes savings and investment, in particular when we're talking about business investment. The current code encourages businesses to move overseas. You're going to see where they want to reduce some of the foreign taxes that U.S. businesses are paying when they try to bring that income back into the U.S. And then, of course, you've heard a lot that the president and his cabinet want to do away with the IRS. The current code enables a broken tax collector or collection system. So the problem here is what do we have in the United States? We have low growth and we have companies that do not want to invest money. Back in April, when the president released his tax report, shortly thereafter in May, Apple came out with an article and they came out with a statement telling the US how much money they were holding overseas, and they were hoping that this creates a tax holiday for them where Apple can bring that money back into the United States and invest that money without having to pay tax when they bring that money back into the US. That's the problem, is that they don't do that. So we have this decreased investment here in the US. So they want to simplify this. Simplification for American families and individuals. Currently, we have 7 income brackets. They want to make the individual rates lower and flatten them. Mainly that benefits the wealthy. They want to repeal the AMT, again, a benefit to the higher tax brackets. They want to reduce income tax from savings and investments. And that's not necessarily mainly the higher income tax brackets, but it's focused on that. Using a postcard to file. As we made a note here, it was promised by the previous president, but CPAs across the country did not want that. But we still want to strive for that system, that a simple, easy tax filing can be done on a simple postcard for a majority of Americans. A larger standard deduction and a larger child and dependent tax credit. And so look at the brackets that we currently have on the left side of this slide, and then what they are being proposed to be under the House committee report. That's not the same as President Trump's proposal. Keep that in mind. So under the current brackets, look at that. As we said, 10, 15, 25, 28, 33, all the way to 39.6. Now we want to go to tax brackets that are 0 or 12, 25 or 33. So definite a potential reduction. As I give in my keynote, I get into a lot more details when we give this as a keynote. There is a trap for some people. Some people that would have fell in the 15% tax bracket will actually get bumped up to the 25% tax bracket under this proposal. That's one of the reasons why this hasn't hit legislation yet. They're still trying to iron out some of those parameters. Simplification of tax benefits for higher education. Currently, we have over 100 pages that deal in the IRS code with higher education tax benefits, and there's so many, and we know them. The Hope Scholarship credit, the Lifetime Learning credit, Coverdell savings accounts. You have all your state prepaid tuition accounts. You're seeing a lot of news lately in the states where they want to make a higher education free to some level. The state of Tennessee does a very good job. If you want to go to a junior college, you have to do a certain amount of community service after high school, and then your community college tuition is free for the first 2 years. So we're starting to see this be a high target of new tax legislation to simplify and consolidate the tax benefits there. Homeownership is always a big one. This benefits a majority of Americans. Currently, our mortgages, we get itemized deductions because of it. We can itemize our home interest. We can deduct our real estate taxes. The blueprint, and we call it a blueprint. We talk about the House blueprint. It's the House Ways and Means Committee blueprint. It's a little foggy as to what they want to do with regards to the home ownership tax credits and deductions that we currently have. Charitable giving, again, no concrete plans in the blueprint, but they do state that they want to encourage charitable giving. Competitiveness and growth for all job creators. 95% of our businesses are what we call flow-through entities. If you're a business owner and you're listening today, that means that the profits and losses of your company are flowing through to your personal tax return, and you are paying personal tax rates. And let me tell you something. If you're a flow-through entity and you think you're in a low bracket, or you think you're in a certain tax bracket, you may be paying more in tax because you are a flow-through entity as opposed to not being a flow-through. In other words, being a C corporation. Because if you're in the 39.6% tax bracket as an individual, you may be paying more in tax for your company than if it was a C corporation paying a lower tax rate on that income. Does tend to create jobs. They're talking about a possibility of they're not talking about it. There is a possibility right now of having a 44.6% tax rate on the income from your business if you are in a flow-through entity. You have a 39.6% individual income tax rate, and then you tack on your state income tax rate. It can be as high as 44.6 and maybe even higher. One of the things they're talking about doing, and it's the last bullet point on this slide, is the C corporation rate may go to a flat tax of 20%. That will generate a lot of discussion for flow-through entities as to whether they should be a C corporation or continue their flow-through status. Here's where we talk about this pro-America approach for global competitiveness. They talk about a border adjustment. They talk about a 20% rate, and they talk about what I just mentioned with Apple, the trapped cash problem. A new IRS, we talked about this at the very beginning, the fifth bullet point. For the 21st century, we laugh at this. Attempts have been made in the past. The culture doesn't change. The tax code is so complex. Yes, it will be nice to simplify the tax code. The IRS has also recently hired collection agencies to do some of their collection work for them. And while that might benefit them from an increased collectional amount, the cost of collection does go up with regards to utilizing a company of that nature. So anyway, it is part of the blueprint, is to try to recreate a new foundation, a new type of system. In fact, what they talk about is they want to have one segment that's just for business. They want to have one segment that's just for individuals. They want to have one segment that's for low-income individuals. So you may see them try to create these segments of the IRS and call them something different, and we'll see if that works. The IRS has tried many, many, many things over the years, and they're often challenged in the courts. So we'll see what happens if they decide to do that. Other things they talk about, elimination of Section 199. A lot of people ask me what this is. This is the manufacturing deduction that companies take. If your company manufactures a product, you can take a personal tax deduction up to 9% of the profits of the company that are related to the manufacturing. We make a mention of this because they are talking about potentially eliminating it because it tends to be special interest. I think it's a huge change if they do that, because we find so many companies that are not taking this deduction that are eligible to take it. They do want to encourage research and development. And you may say, well, how do we do that, Roman? Well, that's when we talk about Section 179 and bonus depreciation. In other words, buying equipment in your business and being able to deduct it immediately. You get an immediate tax benefit for that item. There are limitations on both Section 179 accelerated depreciation and bonus depreciation. It's possible they may eliminate those limitations, and we may see some unlimited research and development credits come through from this idea, from this blueprint. The value-added tax, the border adjustment taxes. Those are the taxes of bringing the funding back in here, as well as the international rules. So what will likely happen? Unlike healthcare, it's interesting. Again, we use this as a presentation across the country. So the healthcare status changes every day. As we know now, sitting here today, the Senate is trying to ramp up a vote for tomorrow. Tomorrow being January 22nd, or June 22nd. The Senate next week. They're wanting to ramp up the vote for next week, Thursday. They've got to have the bill to the budget office by tomorrow if they want to have the vote by next week. So we're seeing these things changing quickly, this landscape. But parts of this we do believe will be enacted. We have tax legislation often. What is likely to pass? Every point that the House talks about is likely to pass in some fashion, because the president has also discussed a lot of these. Again, in the keynote presentation, we discussed the differences between the two. So what is unlikely? The IRS probably won't change. They've been resistant to change in the past. I don't think we're going to be successful trying to recreate a tax code and recreate the IRS at the same time. I think it's more prudent to tackle those on separate occasions. and lowering tax rate on high income taxpayers probably won't pass, as a lot of people do tend to stand against that. So, as a broker, as a business owner, as an accountant, as an attorney, knowing what's on the horizon increases your value to you, to your clients, to your family, whatever it may be. The tax law changes constantly is evolving. So call us or call your tax professional for help. There is my contact information. You're always welcome to shoot us an email, give us a phone call. If you'd like to be on our tax tip list, please send me an email and say, Roman, put me on your tax tip. We shoot out once a month a little email blurb about something that's happening. So July's topic will be the interim report that's being presented to the president. Was supposed to have been presented to him yesterday. We will find out soon whether that was presented or whether he has that in his possession today, and what that preliminary report says. That will be our tax tip for July. So please pay attention. And if you'd like to be on that list, send me an email and let me know. Thanks. I hope you enjoyed today's short webinar, and I'll talk to you again next month.